And good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Wednesday, 20th of April, and we're almost back to normal here because we've got Paul and myself, Andrew Monk, but I'm still in Cornwall. But Paul, you're back from America now, aren't you?
I am indeed, and it's a very nice day outside, it appears, as well.
Actually, it's a very nice day still in Cornwall, but I am coming back to London today. But I have now, I think, finished all my hunting for mines down in Cornwall and information so that we can put together the podcast that we're going to do on Cornish mining, trying to explain everything, hopefully later this week. But let's crack on with today because there's a bit of news out there. We probably should start with a big one, which is Rio, who had Q1 production numbers, didn't they, Paul? Which are, the market obviously doesn't like them. The stock's down quite sharply, actually, 164p, which is 2.7%. It's quite a complicated statement, and it is all about production, isn't it?
Yes, it is, and it's a little bit disappointing on the production results, and that was because of weather-related disruptions, which impacted most explorers in Australia during this first quarter. They had bauxite production of 13.6 million tons, which is about the same as they had a year ago. For iron ore shipments, they had 71.5 million tons, and that was down by 8% on a year-on-year basis, while copper production at 125,000 tons of metal was 4% higher on a year-on-year basis, simply because in the copper statement, that copper comes largely from places outside of Australia as opposed to iron ore, which is affected by the weather and produced by Rio Tinto in Australia. They've also made a couple of bids during the quarter here, one of which to take over the Turquoise Hill project in full by buying out the minority partner here on an offer at $34 Canadian a share, or about US $2.7 billion. Now, they haven't also no change for the full year production guidance because the weather conditions tend to be somewhat seasonal or temporary. So they think any kind of shortfalls they had in the first quarter, they ought to be able to make up.
Yeah, I mean, the stock's come off because it's just obviously worrying that maybe they can't make up. I mean, I've been messaged when I have a question about the impact of this statement on earnings, return on capital employed, cash. If there's no, that doesn't change, presumably, Paul. And actually, most of these, the majors, the mining majors, have completely rebuilt their things and have focused on rebuilding the balance sheet. Pretty strong positions at the moment. Although, of course, you just mentioned that Rio's bought out the rest of Turquoise Hill on the Oyu think about $2.7 billion. So that was a bit of capex. Would you say that's correct, Paul?
I would, and return on capital employed, that's typically a measure which is most important on an annualized basis, and that is as much influenced by profit margins on the movements in commodity prices as well as taxation issues, which impact producing countries. So I wouldn't get too excited or too concerned about quarter-on-quarter changes there, but I would be more concerned if, as you say, they weren't going to be able to make up the difference due to these weather-related issues.
I mean, the way I would sum it up, actually, I mean, certainly Rio, if you look at it, I think as a long-term sort of pension fund type holding, it's been a very good stock. It's well run. Actually, over 5 years, the stock's moved up pretty sharply from sort of 3,000 to nearly 6,000. The last 3 months, it's had a very strong run, which is perhaps why it's come off a little bit today, because it has had a strong run. But Rio, in my view, is a pretty safe core holding if you want big mining exposure. One other interesting thing from the statement is actually they do talk about some of their exploration and where they're looking, and they are still talking about their lithium product at Jadar, trying to win round the locals to get support for it, which obviously would be quite important. And they do start to talk about battery metals, so and acquisitions. So watch out on that front as well, maybe. If you want more on Rio, do feel free to contact us directly with specific questions, and we will happily try and answer them. Let's move on, Paul, because there was another actually quite important announcement today that probably has gone unnoticed. But Tectonic Gold, which is a house stock and one of our favorites, actually made an announcement this morning going through a whole series of things. But actually, I wouldn't want to say they've lucked out, but it does appear that they've maybe got very lucky on their joint venture with Kazira and the Whalehead Mineral Sands project. They do need a signature from a Lexor group to sign it all off. But if they pull this off, that could be an incredibly valuable asset, which will transform the company, won't it, Paul?
Well, it would be transformative if all the permitting is in fact signed off on here, and they actually get a confirmed compliant resource around the mineral sands, because it should be quite very sizable, and as a result, change the profile of just exactly how much mineral and inventory Tectonic might have from what we understand so far. They also announced today that they are getting the drilling back underway at Specimen Hill in Queensland. Again, one of these companies that had been impacted by weather-related issues over the prior quarter. So they will be getting in there to finish the drilling that they had gotten underway. And they appointed a new exploration manager by the name of Ian Bruce in order to get that drilling program completed there.
I see also they're acquiring some more assets close to Specimen Hill that are proven copper assets. And I sense that maybe the big arm of a major is suggesting if you go and acquire these assets, we may come and work with you. So I have to say, I think that Tectonic Gold is probably due quite a sharp run if we're lucky and we get a fair wind. But we are the house broker, so be aware of that. Now, Paul, we should also just mention we put out a note today on ARI Strategic. It's TSX listed, but again, it's a company we act for. And it's a small note. They've been got a tax exemption on a $10 million bond, haven't they, from the state of Utah for their project there?
Yes, that's right. That's a fluorite project that they have in Utah, and any kind of tax abatement that they can get. And fluorite is not a commodity which is widely produced in the U.S., so it is on the strategic metals minerals list of the United States. It's all part of that initiative, I think, in order to show greater kindness to critical materials. And Aries happens to have one of those nice high-grade situations in Utah that they can exploit.
Yeah. Again, if you want to know more about Aries, then do contact us directly. We also had Q1 production from Centamin today, which is the big London gold miner in Egypt. Looks as though everything was pretty much in line with guidance. I don't think there was anything you spotted that was unusual there, Paul.
I didn't see too much unusual there, and it looks essentially, I would say, very steady as she goes for me with Centamin's production profile. I would like to see some kind of improvement in either grade profile going forward or in the total resources that they might be able to add to mine life here. But on a quarter-on-quarter basis, just steady as she goes.
It is. Well, I'd like to see some improvement in their share price. Actually, it's off 6% today and 6p at 91.5p. And of course, it's come back a long way from the heady heights of over 200p back in the end of 2020. Now at 91p. Personally, I think the sentiment is looking a bit cheap at the moment, but clearly the market has a slightly different view. Anything else you want to mention, Paul? Because we have been talking nearly 10 minutes now.
Yeah, just real quick to say that the ASX listed Rocks Resources put a new resource estimate around their Yuanmi gold resource in Australia. Added 200,000 ounces to put the near surface component up to 1 million ounces in resources, and the total project now over 3 million ounces. And also wanted to mention also SolGold put out a new PFS statement for the Caracal copper deposit. And the key point I would say there is it's big, but it's also big capex at well $2.7 billion.
Okay, let's call it a day there, Paul. And we'll speak again tomorrow.
Very good. See you then.